Welcome back to the channel. I think today is going to be a very alpha-packed video because we're at a very interesting time in the market right now. I think a lot of people, generally speaking, and you could see this if you look at the Google Trends, if you look at YouTube views, engagement on X, just across the board, are still kind of checked out of the market. Like, there's definitely not as much interest in the market right now in terms of retail interest as there was towards the end of July. But if you look across the charts, like if you look at Bitcoin, I mean, it's slowly grinding back up to its all-time high. If you look at Ethereum, it's also slowly starting to grind back to its all-time high. And if you look at many of the strong altcoins in the market as well, they are also putting in some solid gains. You can see across the daily and the weekly timeframes, solid pumps across the market, especially on the strong alts. So this probably isn't a time to be offside and checked out of the market. In fact, I do think, especially as we are heading into this major resistance level here on Total 3, which is the altcoin index. In fact, this is a time to really pay attention, because if we break through here and we get confirmation, you probably don't want to be checked out of the market and then scrambling to get back in the euphoric period of the market. Because what happens in crypto markets is when the market chops sideways or goes down, retail lose interest. They just can't deal with it. They just don't have enough fortitude and discipline to stay engaged, even though that's when the biggest opportunities come. Then, only towards the very end of a move does retail really get interested in buying altcoins. It's typically only in that last 20% of the move where everyone FOMOs in, and that's what creates blow-off tops in the market. So today, I want to take a practical approach to giving you guys my full guide as to how I'm positioning ahead of Q4, but also how I would go about portfolio construction, what types of narratives I would look at. And I think the best way to format this is by doing a Q&A. So I've selected some of the best questions that I've gotten today about how many altcoins I'm holding, what validations am I looking for to buy alts from a macro time perspective, what do I think of narratives like AI, RWA, am I still holding some coins, which we'll speak about later in this video, what's my profit taking strategy, and much more. So we're going to go rapid fire through a bunch of questions, and I think if a lot of the audience are thinking these things, chances are maybe you'll be thinking some of these things as well. So by the end of the video, this will actually contain a lot of practical alpha for you, because I've already done 3 days of market updates. Today it's time to get practical and actually talk about how we can look to maximize this next period in the market. So if you aren't already subscribed, make sure you subscribe to the channel, because we're dropping daily crypto bangers. Thank you guys for all the support this week. It's been absolutely crazy. We started the comment giveaway series. I mean, we've been getting over 600 to 700 comments on my videos, which is pretty cool to see. And it's been really nice to see the community also active. People aren't just forcing random questions. Like, some of the questions I'm getting are really, really good. So actually in today's video, it's a special one, because every single question I'm answering today, and I've picked a lot of them, is going to win $100. So my team will be in contact with you. If you are anyone that was mentioned in today's video, you will be getting, so check the comment on the last video and drop your wallet address. It's going to be Tether, so USDT, so let me know whether you're on the Solana or Ethereum chain. You're going to be getting $100. And to make sure that you, if you're watching the video and you weren't selected today, are eligible for future giveaways, make sure you comment on every video. I'll be picking one person from today's video in the next market update that I do to win $500. So it's just a cool thing to give back to you guys, engage with comments, and answer questions that you guys want to know, which I think ultimately is the most impactful thing that I can do for you as a creator. So let's get straight into things here with the first question. I think this is a good question because it's what a lot of people are thinking. After 3 years of Bitcoin rising up against everything in the market, we're finally seeing Ethereum breaking out since June. Do you think that the probabilities now are for alts to start flying over Bitcoin? If the answer is yes, for how long can we take positions in alts? I've realized that November, December last year was a narrow window to position in alts. Yeah, these windows are super narrow. As I said, like, the market typically only really heats up and gets super interested towards the last 20% of the move. So what I do is I take a DCA approach. I identify my strongest altcoins. We're going to talk about them throughout the video today. I identify positions that I want to accumulate, that are exhibiting relative strength, that are looking good, and I DCA into them on red days. So I try not to play around too much with like the 80% of my portfolio. With 20%, I'm more open to playing around, chopping in and out, taking on-chain trades. But the reality is it is a narrow window, so you probably just want to accumulate during red periods so you can DCA out during green periods. So I guess this leads to the next part of your question, which is how long can we take positions in alts? And this is basically what you're asking me is what time frame do you expect this altcoin pump to occur across? Because that's the second component. The first component is accumulation. The second component is being able to time how you exit. Looking at the market right now, we are just starting to see a breakout on Ethereum. So on the H1, just like Bitcoin, we've had a downtrend shift into an uptrend. And on the weekly, it also looks super strong. You can see that we have just been consolidating below the prior high. And on the weekly chart, it still looks like ETH wants to break new highs. So nothing to be alarmed of on ETH. In fact, it's nice to see the lower time frame structure is now starting to shift because the high time frame structure looks really good. So now both high time frame and low time frame are aligned for the first time in a few weeks. Looking at Bitcoin dominance, we can see this is also coming down. You know what I've been saying over the past week. I expect dominance to keep coming down. That's exactly what's been happening. Then I think we see maybe a little bit of a reaction in this zone. I might look at shifting some altcoins into Bitcoin for a potential Bitcoin breakout, and we are seeing Bitcoin flirt with this range high level now as a next rotation in my portfolio. But I'll update you guys when I do that, because it will depend on how alts look, how Ethereum looks versus Bitcoin, and how Bitcoin dominance actually reacts to that zone. So probably this will be a decision that I have to make next week. So make sure you're subscribed to the channel to get updated with the latest stuff that I'm doing and the latest eventualities in the market. Another chart that looks really good in terms of altcoins, and I'll get to the final answer of your question in a second, is others BTC. I do think this comes towards the orange line and then probably faces a bit of resistance, because by then it would have been on a big run, but there's probably still a little bit more juice in the lemon if you want to look at it. But then of course, where there's a lot of juice is in total 3. And even on the others index, which is lagging behind but still looks good in terms of a reversal right now, there's probably more room to run on these as well, especially if you do get a total 3 breakout. It does include some stable coins and large caps, which skews the index a little bit, maybe looks more bullish than others BTC, for example, but both are in uptrend. So the important thing is that you have confluence across both charts. So if you want an idea of time frame, exactly what you said, the seasonality towards the end of the year is typically super strong. We may actually see things extend into Q1. I mean, gold's looking really strong right now, so that kind of potentially anchors Bitcoin's price higher and sees an extended rally. So I'm not totally against the idea of a peak in 2026. I've been saying that since April earlier this year. However, Q4 would be a decent time to look at maybe laddering out some profits as altcoins, start to go more parabolic in an ideal world, as long as we get no shocks on the rate cut side in 5 days time. And if you want to look at timelines of how these things typically coil, even if we do come, have like a fake out and then come back down, have one more sweep or something, like you're probably looking towards December anyway. Like this is just like a natural eyeball of like price action right now. Of course, we could break now and then come back down and have a retrace and then a secondary leg, but this is going into 2026 now. And this type of price action, look, it might not look exactly like that, but in terms of time frame, I think is fairly reasonable. So I'm still going to stick by my Q4 to Q1 prediction that I've been sticking to since April. All right, next question. What do you think about the current state of the 4-year cycle theory? Have we broken it because of the change in structure? And if yes, how do you see the change of structure playing out over the next couple of years? Absolutely fantastic question, and probably deserves its own video, because we could go really deep into the current dynamics with fiat debasement and the discrepancy between the high income earners and the low income earners, and what this means for the Fed and policy changes and labor rates with AI, and how all of this probably leads to more money printing and thus hyperinflation of assets. That is probably a longer conversation, a much more nuanced conversation. But what I will say to simplify this question is yes, I do believe, and I've been saying for a while, that we aren't in a Bitcoin 4-year cycle anymore. And the reason I believe this to be the case is because Bitcoin is just following the business cycle, and Bitcoin is now more of a macro asset than ever. And Bitcoin, in an environment with the extreme monetary basement that we are seeing and are likely going to continue to see, especially as AI replaces more jobs and aggressive monetary policy continues, as has been the standard over the past decade or even longer, really, it's hard to envision a world where Bitcoin on average doesn't go up. Now, this doesn't mean that it can't have periods of downside or mini bear markets, but I think these bear markets are going to look a lot different from the typical 4-year blow off top and then, 4-year periods where it goes through a lull. And primarily this is because, well, the business cycle still looks strong. You can see gold is making new highs here. Bitcoin is anchored to gold price in terms of percentage. The S&P keeps making new highs as well. So this is a signal that the business cycle is over. Crypto typically doesn't top until the business cycle is over. And Bitcoin also from a macro perspective looks super strong, just like equities and gold. And 2, because the Bitcoin halving diminishes the relative effect on inflation, because it halves and halves and halves and halves and halves every time there's a halving, we're unlikely to see as big of an impact. And that is also extremely forecasted in the market. Now the market already prices in the halving before it happens. Think of it like an altcoin that, has this fully diluted number, and the market is already pricing in future dilution to assign its current market cap. So it just becomes less relevant over time. And what I would be looking at is the business cycle. By business cycle, I mean the cycle of equities going up, businesses being in an expansionary phase, which is being triggered by M2 increasing, global monetary supply increasing, and rates coming down. That is the business cycle. When that shifts into a more rate-heavy environment, they might have to start, raising interest rates again. If inflation becomes an issue, then that's when you probably see equity starting to come down and front-run that pivot a little bit. But it hasn't happened yet. So to answer your question, going by an arbitrary date or an arbitrary month or an arbitrary quarter probably isn't the way to go in a regime where Bitcoin is more of a macro asset than ever. All right, next question. What is your profit-taking strategy for Q4? Keeping in mind the bull cycle could continue until Q1 2026, as I've discussed. Yeah, profit-taking, I actually did a full video over on my Crypto Edge channel. So if you're not already subscribed, go subscribe in the link in the description below. I'll leave a link because this video here is my full sell plan. I'll give you an abbreviated version here today, but obviously go and watch that because it's much more curated. And if you go onto any of these videos and comment, so it could be my latest video, which is teaching you to trade, gives you all the basics of trading in just 5 minutes, which took me over 5 years to learn. Or if you even comment on the sell plan exit strategy video, I'm going to be giving $500 to a random commenter on any of these videos as well, and that will be announced on the next market-based show here on this channel. So go and comment on this channel. I'll be looking at the recent comments, and we're going to reward someone, but you have to be subscribed. So we're going to double check that your username is subscribed to the channel. So link in the description below. It's my evergreen channel. I'm posting some of my best content over there. It's shorter, more concise, whereas this channel is more live market-based updates. And comment on any of the videos and you put yourself in the running to win $500. And I think you'll love the channel content over there that is coming over the next few days. I'm happy with these videos. I think they're very informative, but the content's only going to get better and better and better. But to answer your question, because I want to abbreviate the strategy that I mentioned on this channel, I think that the best way to exit the market, just like you would ladder into the market, is laddering out of the market. Now, there are two ways you can ladder out of the market. There is validation on a preset sell plan, and then there's invalidation to the downside. So what do I mean by validation? Firstly, basically, you're validating preset levels that you have already pre-marked on the chart or percentage bases that you would DCA out of an altcoin position. So, for example, if you bought Solana at $150, when you buy, you might say, okay, every time it goes up in $50 increments, I'm going to take 20% of my profits off the table. So as it goes to 200, you take 20%. 250, take 20%. 300, take 20% of your profits, of the remaining profit pool. So you always keep a little moon bag in, but you keep riding it up. Or with a riskier roll, you just might say, okay, every time it 2x's, I take half of my position. Or, on the first 2x, I'm going to take half my position. And then on every next incremental 50% move, I'm going to take 25% of my position. And how aggressive you are depends on how late we are in the cycle and also how risky the altcoin is. If it's a riskier altcoin, you want to be more aggressive with profit taking. If it's a safer altcoin, you don't need to be as aggressive, because this is where the second phase of the strategy comes in, and this is invalidation. Invalidation is going to be to the downside. So if a token starts breaking below a predetermined stop loss level, this can either be a max percentage drawdown or a clear high time frame level on the chart, you can exit that position. And this is where it can get a little bit complex, because you might look for confluence with Bitcoin. So you might say, okay, if Bitcoin breaks below, I think it's the weekly money noodle right now, which is a really key level on the chart. If it starts to break and close below, which it hasn't so far this cycle, then I would look at de-risking a percentage of my altcoin portfolio, or I'm going to de-risk altcoins which also are correlated to Bitcoin and are breaking down on their key high time frame levels as well. So the invalidations get a bit more nuanced, but the best thing to do is actually just laddering out of positions as they go up, and then just have a preset invalidation to the downside, and then pair that with a macro invalidation. And for me, the weekly money noodle on Bitcoin, obviously I'll keep you guys updated if we actually do break down, that would be the level where I start to just de-risk even more. But by that time, alts would have already pre-sold off. So it's probably good to also have specific invalidations on alts. And ideally, you've already taken profits on many alts at that point. So even if you do invalidate for a small loss in the remainder of your position, you've already made money on the way up. I think the best strategy in general in terms of profit taking is just making money on the way up. All right, we still have a bunch of questions. Remember, all of you guys are winning $100, so I'm going to go rapid fire now. There are some bangers to end the video here. So make sure you do take a look. I know it might be a bit blurry, but take a look to see if your username was mentioned here. And if so, go back onto the last video. I'll remind you again and comment your wallet address. So reply to your own comment. Reply with your wallet address and tell me what chain you want your Tether sent on. All right, Silver Miel says, my question is, what do you look at when buying low caps, be it memes, RWA, GameFi? After buying, what factors determine if you're going to be holding these positions long-term, medium-term, or short-term? Yeah, the validation factor for that position will determine my time frame. So, for example, if there's news that breaks out about a certain altcoin, like Athena the other week, where there was news of treasury companies or them building a fund which was buying back tokens, that was like a 1 month process. Obviously, if you can buy closer towards the start of the month, you can make money as the month plays out. But obviously, with a new entry like that, you would be looking to sell a bit more aggressively towards the end of the month to try and front run that news. So that's an example of the trigger. So your validation for an entry is more of a short to medium term validation. Whereas if you are buying an altcoin under the thesis that, okay, you think at some point AI is going to run, then you might be, spraying and praying into a few AI coins. Then you might want to have like a medium-term outlook, but have invalidation to protect against downside. And long-term positions for me would only really appeal to proven business models that have staying power. So I'm open to holding like Solana or Hyperliquid, or even ENA if stablecoins keep being adopted, or Pump Fund if speculation keeps running rampant in the market. These assets I could see myself holding long-term, but I'm not married to the idea. The only asset I'm really married to the idea of holding long-term is Bitcoin, then probably Ethereum, then probably Solana, then probably Hyperliquid. But even so, like as you move up the risk curve, I start to get a little bit more skeptical with long-term. And by long-term, I mean multi-year. So the majority of my altcoin bags sit between short-term and mid-term. Mid-term, if it's a future thesis, and short-term, if there's a specific catalyst for a trade. What I recommend is actually identifying what your ideal time horizon is on a trade when you get an entry, because this will dictate how wide your stop or your invalidation is between your current entry and the level you invalidate. And the last question, this is a personal question. Do you make more money investing in bigger alts than the low caps, which we know are riskier, but sometimes more rewarding? Well, bigger alts are more liquid, so sometimes it's easier to go in with more size. And because the perp markets aren't as illiquid, you can actually like have a bit wider like stop gaps. And some of the riskier altcoins, if you're trading perps or just have big positions, you can get those wicks, and it kind of makes it hard to manage risk. So naturally, that limits the amount of capital I'm willing to put into the low caps. So I guess some of my biggest trades have been on the high caps just because I can get a lot more size in. Like ENA has been really good to me recently. MANTA, which is only like a 2.5x. I've had a combination of spot and perps at times. That's actually been really good because I was able to go in with size. Hyperliquid, which I first bought at $8, that's been a great trade for me. Going back to last cycle, like ONDO, I think I first bought in at 20 cents on the liquid market. I was also in pre-sale, but my liquid position, which I told you guys about publicly, went from $20 to like $1.50, sorry, at one point. So that, I think I sold out most of it by $1.20, but so it was like a 6x. But you get the point. That's more of a liquid asset, so it's easier to trade. Even my PEPE position, which ended up doing 100x, obviously I only made like a 20x net. That position was a little bit more liquid than some of the other on-chain altcoins. I think for a lot of the viewers here, to be frank, if you're trading with lower amounts of capital, so like less than $10,000, especially like as you get less than like a few $1,000s, liquidity isn't as much of a concern, but it still is a concern in terms of risk management. So even though liquidity is not going to be a concern in terms of getting, entries and exits, it still might prevent you from having risk parameters because the downside can be so much bigger if you get wicked out. So I guess it's a hard question to answer. I've kind of given you maybe a bit too much context and made this answer convoluted, but I make more money investing in bigger alts, but when I hit a lower cap alt, obviously percentage-wise, I do much bigger gains. And sometimes, occasionally, it ends up being bigger than the bigger positions. But to be honest with you, the biggest gains I've had in the market are usually on the bigger altcoins. And when I'm saying bigger, I don't mean like 10 to 20 billion. It can be like even a couple $100 million, but micro caps become much harder to size into. So naturally, you make less money. There was great trades, though, that have taken like Launchcoin, for example, which were, I think, 17 mil is when Fabian first posted it in the Discord. I bought in at like 50 mil and it ran to 300. And I was able to get in enough size for that to be a meaningful position, which was one of my best trades of the year so far. So hopefully that answers the question. Now, on the subject of low caps, I want to continue with the series, Gem of the Day. If you don't know what the series is, we've been doing it for the last 3 days here on the channel. Every single video, I'm giving you a gem for you to look into. It can be a lower cap gem. Yesterday's was really degen. It could be slightly higher market cap, like a couple hundred mil. Today's one is kind of in the middle. It's an AI gem. It's called Graph AI. I think this is quite an interesting one. I do have a small position in this, but that sits within the 20% risk on section of my portfolio. And this is kind of more of the spray and pray portfolio. So it's not my core portfolio, but I do have some bets that I'm taking in AI, albeit this is one of the smaller ones and it's not super high conviction for me, but it's just something that, I took a punt on. I don't think I have a super strong edge, but I do like the fundamentals here, and I like some of the team and their experience, and I like the fact they have a partnership with Fetch AI and the ASI Alliance overall. So I think it's interesting. I've got some of the data here. I post all of this in the Discord first. So yeah, that's my gem of the day. Go and research it further. Remember, I'll keep saying this until you guys are used to the series. Gem of the day isn't a buy call. It's not saying ape everything right now. It's giving you insight into interesting projects with research that you can go and research further. Kind of, instead of giving you a fish, I'm teaching you how to fish, but I'm also, telling you maybe where the fish are. Bit of a weird analogy, but, just helping you where to look, if it's AI, if it's collectibles, if it's RWA. Some of these are going to be time sensitive on some days. Sometimes they're going to be longer term stuff. Like this is probably more of a midterm thing. Short to, probably a midterm thing, but I'm just trying to give you alpha every day. So that series is awesome. All right, let's rapid fire through the rest of these. How many coins do you think is good to have in your portfolio? Kerno105 asks, I think 5 to 10 positions in your core portfolio, which is around 80% for me. And then in the 20%, you could probably go like 10 to 20 positions, but that has to be a bit more actively managed. And the more time you have, the more positions you can manage. I feel like I can manage like 15 in my non-core portfolio, but that's because I'm doing crypto all day. If you have a job or something else, it's pretty hard to like invalidate and keep track of the team and the news, etc. if you hold like more than 10 positions. So try and keep it definitely sub 15, ideally sub 10. Zachary3 says, question for you, Miles. What validations are you looking for from a macro perspective? Yeah, I just discussed it before. The Bitcoin weekly noodle is one. Oh, sorry. I thought you meant risk off. You're saying that'll signal risk on period for the market. Okay, so risk off is Bitcoin dropping below that weekly level. Also, just signs that the business cycle is over, starting to get weird price action on gold and bonds relative to stocks. Equities would probably be making lower highs at that point. So these are the types of things we'll look for in like Q4 to Q1. It could potentially be a lot later, but let's see. But from a risk on perspective, clearly a breakout on total 3 would be a big one. I mean, I think there's a little bit more room to run here, but a breakout of this trend on others BTC would also be massive. But ultimately, the number one thing we are going to look for is a new high on Ethereum. I think a lot of the fun for alts doesn't happen until ETH makes a new high. I still feel like there's more of a wealth effect on the ETH blockchain than Solana, because we've seen Solana run back up to like $237 today, but we haven't seen that much action on chain yet. I think Ethereum drives a different type of crowd, and I think there is a different type of trader on Ethereum, which is a little less retail. There's a lot more whales, and that has a better trickle-down effects for DeFi and altcoins overall. All right, next one. Crypto to degen. I bought some altcoins around the local top in November last year. Now prices are finally coming closer to my entry levels. Since I know buying at the top was a mistake, should I exit at break-even to reduce risk or hold a little bit longer in hopes of further gains? I have a good answer for this question because it's a trap I used to fall into, like sunk cost fallacy, and just I would hold positions I wasn't that bullish on because I was like, oh, I'm going to wait till I break even, or, I'm going to put more in just to try and double down. And I would like add to my losers. And I'd cut my winners. Like I'd recycle from winners and put it into losers, which is terrible because in the market, you should be focusing on your winners. Like even over the past month, all the coins that are outperforming are the ones we've kind of forecasted, like MNT, Palm, Hyperliquid, ENA, like they're kind of boring, but they have been outperforming. And that's why they make up such a large section of my core portfolio, because they have relative strength. And if you were just adding to your winners and cutting your underperformers, you probably would have made more money. And this is typically what happens in the market. But to answer your question here, I have a great framework for this. Imagine all of these positions in question were wiped to zero. So imagine if you woke up in the morning and magically your entire portfolio was worth zero and you just got the stable coins. So they were like magically converted into stable coins. Let's say you have $10,000 worth of tokens. You just wake up with $10,000 of Tether. Would you rebuy those positions at the current price? Would you rebuy? If they were converting into stablecoins automatically, would you rebuy? That is the question you all have to ask yourself for any altcoin you're holding in your portfolio at any given time. Would you buy at the current price? Because holding is as good as buying. You're basically committing to being bullish on a token at the current price if you are willing to hold a position. So I think that mental framework is so powerful because it will actually stop you from these fallacies of like, oh, I'm going to hold for break even though there might be a token you're way more bullish on in the market. We'll just rotate to the token you're more bullish on, because in the long run, you'll probably end up making more money there. You won't always get it right, but that's a great mental framework that I would use. Next one, Suri, sorry, it's hard to say our name, Suri SPR. Should you risk more and target lower cap coins? If you have like a lower portfolio, like $1,000, how would you do it if you were in my situation? Okay, assuming a portfolio of $1,000, it depends on what your goal is. If you only want to make $3,000, then no, you could stay in the safer coins. But I think a lot of people with 1,000 are trying to make a 10x. Now, I think that might be a little bit too ambitious. I'm just being completely honest. But if you are genuinely hell-bent on a 10x, like I want to turn this 1,000 into 10,000, clearly you're going to need to take on a lot more risk and get into the lower cap coins. You know what another interesting framework is that I don't hear many people talking about? It's risk relative to time. So how long would it take you through your net income after expenses, to make back your portfolio value? Because if you're netting $1,000 a month after expenses, well, then you can kind of punt around with this portfolio because you know that it's only going to cost you a month worth of time to make that money back. And I think time is a lot more tangible for people than numbers. Numbers on a screen can get really disconnected, where it's a lot more real to imagine how long it would take you physically to earn that money back if you lost it. And this also helps with risk profiling around, how much to allocate to a certain coin. So if you have $1,000 portfolio and you're trying to 10x, but you're making $1,000 a month in additional income, yeah, you can go super risky because, you kind of afford to take that risk. It's only going to cost you 1 month of time. Whereas if it takes you 6 months to save $1,000, you're going to have to go a lot safer. So it depends on two things. One, your income earning capacity, and two, your overall portfolio target. Not the actual dollar amount actually isn't that relevant unless you know those factors. All right, Callum has a question here. Callum Mishaw. Do you think we get an RWA outperformance rally or an AI narrative rally? I've heard you talk about these as narratives you like in the past, and also what coins you're interested in those sectors. I think they both run in their own merit at their own times. AI is a bit like gaming, but I think in the sense that it's just not pumping as much as people would like, although there has been specific runners within the sector which have done well. The reason that's been the case is because there's just a lot of dilution, to be frank. There are a lot of new AI protocols launching, a lot of bigger blockchains launching. How many major AI things have launched? I mean, you have Nilium, which is kind of AI, you have Sahara, recently Camp Network launched, and I actually like all of these projects, but there's just a lot more now, and agents aren't super hot, so a lot of the agent plays aren't doing that well. So although I think AI is a big narrative, you have to be careful about what you position in, and I've kind of been forced to weight down a lot of positions just based on, as I mentioned before, underperformance versus other things that I'd like to get in that probably are a bit more aligned with the current market. That being said, I am taking some low cap bets. I mentioned one in Gem of the Day in Discord today that I just showed you before, that I'm kind of positioning in case AI comes back, because AI is, I think, something that can run at some point, but it'll probably happen all at once and really fast, so I'm trying to position ahead of time. RWA is a little bit different. I think it's way more trendy. It's way more on market right now, and I still think holding coins in your portfolio like CPOOL, like holding PENDLE, Checks as well have had some good recent announcements. Although I hold slightly less of these than I used to, I still hold decent bags, and hopefully they come back and even give more validation for maybe future entries as well. There's also some merit to waiting for a narrative to start, maybe not being the earliest to the narrative, but getting in on the confirmation of a new uptrend. You don't always need to front run things. So I kind of do a mix of both. I'll position some bets early, I'll put some chips on the table, but then I'll save some chips to jump into the narrative a little bit higher with more confirmation. That's also a good way to trade. Syrup's a good RWA coin. Cookie's actually a good AI project, but even if you're really bullish on, let's say, Cookie, yeah, you could have a small bag now, but your bigger position could actually come on an uptrend when the narrative's hot. Obviously, there'll be times where a token pumps 100% in a day on an announcement and you might miss it, but rarely do things run away with no retest. I mean, even CPOOL gave us a perfect range breakout retest a couple of weeks ago. Many tokens actually end up giving you those entries. Even ENA and MNT have actually adhered to their ranges, so you wouldn't have missed them. The only time you might miss it is something like WorldCoin, which just exploded. Yoan said, we keep hearing all the same portfolio numbers, like $10,000, $100,000. How would you weight one that's in between, $5,000 to $50,000? I'm going to stop you right there. It doesn't matter how much it is. As I mentioned before, there are other factors like your risk tolerance, your goals, and your income earning capacity, which matter more, and your percentage allocation to crypto. So I think at $1,000, $5,000, $10,000, it's kind of arbitrary. The way I weight things is 80% core portfolio, 20% riskier. You might skew that to 50-50 or 60-40 or 20-80 or whatever, 65-35, depending on the variables that I discussed before. I don't recommend using ChatGPT for financial advice. However, it's good to run a thought experiment on ChatGPT, and I do this a lot, just running through these scenarios, like actually input it, because I won't be able probably logistically to answer your next question, even if you gave me that information. So what you should probably do as a thought exercise is just, put in your details, your income earning capacity, obviously do this at your own risk in terms of information liability, etc. Put in your goals, your risk tolerance, your experience, and try and brainstorm a plan. Don't let it tell you exactly what to do, but use it to give you a bit of a structure, at least to kind of journal your thoughts down and then come up with something based on your goals once you understand the alignment of everything. Because there are many factors which go into how you would actually allocate. But would I recommend a lump sum or DCA? I always recommend DCA. Just DCA on dips on strong coins and you'll do well. I think lump summing's risky unless you're totally out of the market. Then if you're going to lump sum anything, just start with like Bitcoin or Ethereum, which are more likely to give you those returns than, lump summing some of the risky alts. To end this video, I would like to shout out some legends. Bitman, all this alpha in under 30 minutes. I am trying to set the record on crypto YouTube every day for alpha per minute. Sometimes I speak really fast because I'm just trying to get you guys as much alpha as possible. I think yesterday's video, I did a good job at that. That's basically the zone I get into before recording these videos of like, how much alpha can I give in as little time as possible? And sometimes the shows are long, but I still think we keep the APM ratios up. Mr. 7, been following your content since you were in BANTA. Make my day, Mars. Thank you very much. You are a pretty loyal follower because I joined BANTA at the start of 2022 and I had my channel in 2021 before I went solo again. So you've been following for many years. Thank you very much for all of the support. Glad you keep enjoying the videos. Matt Breezy, you're a new subscriber, but we love the new subscribers as well. You're all part of the family. Welcome to the channel. Thank you for enjoying the content. Hopefully you guys enjoy the content even more because I'm putting a lot of effort into leveling up and my mic just dropped, and also giving back to you guys. I'm not going to edit that out. Let's just keep it real here. Emerald Financial Technology said, always waiting for your videos in the current market. Thank you for your insights. Yeah, and I guess that's where this channel comes in. This channel for me is like my real market update channel. Like I can actually go through charts. We can go through current stuff. If there's a huge pump or dump, I can come on and make an emergency video. I can be more here for you guys. Crypto Edge, which is in the description below, is my new channel, which is just evergreen. So these are short, concise videos covering single topics, like how I exit exactly, how I would learn to trade if I didn't know anything about trading. So just even for investors, it's not just for traders. Knowing the basics of support, resistance, invalidation, this stuff's so important. So I'm making these guides almost like an educational channel. And I'm even going to be dropping videos like, best $1,000 portfolio and stuff like this to help you guys on the education side as well. Because this channel is very good in terms of practical stuff, but I want to have that evergreen, bite-sized alpha presence as well. So make sure you subscribe to that channel, link in the description. And as I said, comment on either of these videos, make sure you're subscribed because we're going to double check. And on the next main channel video here, I'll be picking someone to win $500 that commented on either one of these videos. We're kind of going crazy on the giveaways at the moment, but I guess I'm at the stage where I'm happy to give back and help support you guys as well, because you guys are supporting me by commenting on the videos and watching the videos every single day. And there's going to be more where that came from. When the time's right, I'll announce my next steps on that front. All right, see you guys in the next one. Have a lovely rest of your weekend. You'll probably be watching this on a Friday or on the weekend, so enjoy. I'll see you later. Peace.